All right, what's up, guys? My name is Matt, and basically, I just wanted to go through a couple trades because I know that liquidity inducement theory, the LIT, the by WWA, has been like a pretty big thing in the trading space that everyone wants to trade like. And so I've been trading smart money for a few years now, or a couple of years now, and learned a lot. And so basically what I was thinking was like, hey, maybe I can go through some of their Instagram posts, just to start off and maybe explain from my perspective of why these trades were taken, and go a little bit in depth into them, because I know that they share them so then people will back test them, but a lot of people just don't know where to start with them. And so I figured, hey, maybe I can use my experience to help out and kind of assist into why they're taking these trades. And so yeah, if you guys like this kind of style, just let me know, and I'll start making more. And maybe we can backtest a bunch of them, or all of them even, as long as the 1 minute, as far as the 1 minute goes back. So yeah, let's just start off with this one. So this is, again, December 15th. You can see there is 1, 2, 3 entries. I was looking through it a little bit before. I don't know why they took this entry, to be honest, but that could just be from their lit stuff, their lit material that I don't know. Because again, I haven't taken their course. I haven't taken their the lit course either. However, I have been trading against smart money for a couple years now, learning from the likes of ICT and Chris Laurie. So I feel like they're the true goats. So if you understand their content, then you can understand why these guys are entering where they're entering, and you can kind of reverse engineer these. So yeah, anyways, I don't want to take too long, so let's just jump right into it. So you can see here, this is December 14th. I'm gonna fast forward, but I wanted to show you this first. Okay, so when we look, let's look at the overall structure here on the daily, because the daily is an important time frame for swinging. And then yeah, we'll start from here. So initially what we have here is we have daily structure, okay, and that was broken after getting swept, right? So this daily low was swept. We had 1, 2 candles afterwards, and immediate consumption of this high, this high, this high. So that's 3 daily highs, 4 daily highs, sorry, 1, 2, 3, 4, that were completely consumed in one candle. So this is showing that there's definitely a lot of liquidity, or a lot of orders that were injected into the market here, and price wanted to be pushed up. And so now we can consider this a daily break of liquidity, or sorry, break of structure, right? So we can just label this here. I'm just going to put a D for daily. Where does it go up to? Well, look at this. We have daily equal highs right here. So if I just bring those over, that's a decent target to go for, right? And that's also the next, as soon as we break this daily structure, targeting this daily structure. And again, there was something up in here really nice, actually, that we were looking at as well. So I'm just gonna modify it just to be above there. Okay, so again, the whole point why I'm showing you this is to understand the structure. Right now, from this low to this high is the trading range that we're trading in, right? So let's just mark that out, the trading range. So this is the daily trading range, meaning that if I mark this out from the 50% here, okay, let me just drag this over quick. Anything under the 50% line here is going to be a discount in this price swing, meaning that if we want to buy, we want to be looking for anything that will signal buys from this point down, right? If we're looking to go long, and now we are looking to go long. Why? Because right here we have a sweep on liquidity, and we had to break a structure. So therefore, right here is where the daily target is going to be, right up in this level. Why? Because think about it. What's going on in structure right now? We had a downtrend, downtrend, downtrend. We broke structure, okay, and then came back down, right? We broke structure, came back down. So therefore, this high should be the next high, right? If we break structure, now we should put in a lower, a higher low, and then target the higher, or the high here. Okay, so that's this high right here. So we have to be bullish in this scenario until this low is swept. Once this low is swept, then maybe it can just turn into some sort of breakdown like that. Okay, so but for right now, we have to assume bullishness. Now, where? right here, we see the last down candle. If I drag that out in time, you can see last down candle before the up move. Let's go main zone here. Okay, and that's again, that's in the discount area. You can see though that we've tapped into it a couple times, and you can see that this can actually be refined right back down to here, right? Because it's within this order block, and there was a nice imbalance there. You can see that we had an inducement right here, meaning that there was liquidity resting just below this level that is sponsoring this inducement, which means that this would have been a good buy from right around here if you could have caught it. We come back up, and now this is the one that we're anticipating, right? As soon as it hits here, we're anticipating this to fill and break up here. Now, what happens when it doesn't do that, right? When it doesn't do that, that to me signals that this now is going to be the weak low, or this is going to be the level that's going to be targeted on liquidity. So potentially there's something a little bit deeper into this POI that needs to get grabbed before the big move can go up. And as you can see here on the daily, we have equal highs forming right here between daily highs, which is super important. We have relatively equal highs up here too, right? That are forming. And so we're building a reason as to why we would go higher. And we're creating this kind of little downtrend that's going down right now. Now, additionally, we have one run, we have two runs, and then potentially we have three runs into this refined level. We can actually refine it to a little bit right here if we want, to just get the hidden order block, the hidden base, where we have this wick high and this wick low. That seems more reasonable to me because, again, that's going to be about 50%. This is going to be 50% of this order block here as well, roughly in that same area. And I'll just mark this out, the 50%. Okay, there we go. So we haven't mitigated the 50%. So potentially we're going to go do that right now on the daily. Again, something else to be looking at as well is, let me just put this to default here. Okay, is that if this were going to continue up, you can see that we have a rejection block, or is what ICT calls a rejection block, where it's the wick. We have a rejection block, we have 50% of it. But realistically, price came back down to here. What I would want to see as soon as it hits this level is what I would want to see it continue up and break this level and then continue. What ended up happening though, was we tagged it right here. We went up, we failed to make a high and got this massive wick rejection to move back down. And you can see it closed very bearish. So to me, the next day that I'm anticipating, right, the 15th, which is what, again, right, the December 15th, this is what the WWA guys were trading here. I'm anticipating this daily low to be taken, right? It just seems logical that this daily low is going to get taken. So I'm just going to mark that out right here and put it right like that. Okay, so I'm going to take this off. No need to have that and clutter up everything, but just know that this is going to be the target for this level. Okay, so for the daily level, but there's fractal price within the daily price swing, right? If this is the daily price swing, then on a lower time frame, we're going to have a downtrend into a POI, and then that's going to break, and then we can start looking for longs. Okay, so just keep that in mind. But right here, that's the daily time frame. Again, don't want to keep this too long, but I wanted to explain the daily a little bit more in depth than anything. So yeah, what else do we see here? Now you can see these three down candles is an order block, right? Three down candles is an order block, immediately consumed. What else do we see here? We see a nice imbalance on this candle there. This has actually been filled already beautifully right to the T. So realistically, I would probably just refine my entry zone into this, and then I wouldn't touch it anymore, because I know that I have this zone right here. This is going to be the 50% of the OB, right? This is the daily OB, this whole thing right here. So 50% of it is roughly there. It also lines up beautifully with our what's it called? Refined little zone here. Okay, and we did tag it right there. You can see we did tag it. We broke structure and went up. But again, on this time frame, what did I say? Remember that we failed to create a higher high here. Failed to create a higher high. We did create one right here. Okay, so you can consider this a consolidation, break a structure. Okay, but that's what I was saying before, is how I wanted to see it hit here and then go. Maybe sweep this level a little bit and go. But what ended up happening was we went up here and we just sustained selling order flow right here, right? Low, high, lower low, lower high, and that was actually equal highs right here, and a lower low. Okay, and so now obviously what you'd be anticipating, again, this is the previous day low, is that if price comes back up to here and we get a retrace, well, then we're just retracing this leg, right? And then that means that this is going to be our trading range on the 4-hour, right? So this is going to be our trading range on the 4-hour. Obviously, we do have some liquidity pooling up here and up here, but the 4-hour is still bearish. And again, we do have, based on the higher time frame, is that we have potentiality to get down into this level and sweep this low for the 1, 2, 3 runs into 50% of that order block plus all this confluence right here before that move up. Okay, so when I'm looking at the 4-hour, I'm just going to be looking at this. I see a sweep on liquidity right here, even though it did leave equal highs up here. On an interim perspective, we swept liquidity and came back down. And what's interesting is the same kind of thing happened here, where we had break a structure right here, or a sweep, and then we broke structure right here. And then we come back up, then we have this complex pullback right here. So this is all just a corrective structure, whereas this was the impulse, and now we're getting another impulse down to break this leg. So it's the same thing that's happening right here, where you can see it, where we have an impulse, we have this complex pullback that failed to break this low, went back up, mitigated some point up here, and then went down. So it's the same thing on a higher time frame. We have a little bit of a fractal price action going on here. So where would I be looking to enter trades, or at least monitor trades? There's going to be 2 areas that I'm seeing right now. First of all, right here. Why right there? Because what this is this is an order block on a higher time frame, right? So this is going to be an order block. These 2 bullish candles swept liquidity and then immediately consumed. So this is going to be the open. This is going to be the open of that candle right there at 12778 or 12780s. And again, we would be analyzing price right here. If there's a sell, then that's where we're going to be looking at least targeting the previous day's lows, and then potentially even targeting down here into this kind of price level right here. Okay, so let's just mark that off. The next opportunity would probably be up and around here. Let me just put on the POI so I can differentiate between what's a POI and what's a target. Okay, and then finally, the last one would be up in here. I don't think it's necessary to put that right now, but we'll just put these 2 just in case if it sweeps back up to there. Okay, so that's the 4-hour done. Let's go to the 1-hour. Again, right at that open of that order block, look what we have here. We have an inducement, right? And what is an inducement? Again, I think I brought it up a little bit earlier on this point here. What that is that there's a nice wick, or there's a nice structure, clear, that people would say, oh, that's a lower low, lower high, and then that's what you're anticipating, right? But if it's right in front of a zone, right? So again, our 4-hour order block, higher time frame zone, what it's doing is that if there's people going to be entering shorts here, right? Say shorts right here, smart money shorts, their stops are going to be just above this high, right? So their stops essentially are providing the liquidity to sponsor this key level, that this key level is going to be strong because there are stop losses that are placed there, aka liquidity, right? So it wants to be inducing, this point is going to be inducing this level. Okay, and just a quick let's see what inducement stands for, right? A thing that persuades or influences someone to do something, right? So when we think about it, this level right here is inducing people to sell from right here, right? So it's inducing people to sell right here, which is what we want. We want to see an inducement, and that's going to be strengthening our zone right here, which again, if you look at it also just for some confluence here, if I was to go long, right, we had a sweep here, we had a break of structure here, and say price was coming down here, would I not be entering long right here, right at this last down candle, and my stop loss would be here, right? And for institutions that are looking to go long here, what's going to happen? They enter positions here. It fails, so that's okay. They can hold the drawdown, and guess where they're wanting to get price right back up to? Right to where they entered, so they can mitigate out of their position and sell down. So that's the whole thought process behind it. And so now in the 1 hour, we have a beautiful key level there. Now, did we mitigate everything down here? Yeah, we did. Look at this. See, we have a nice little imbalance fill right here. So again, little hidden order block. You can see that that was on the 1 hour. And that's why this level is probably going to hold. It's probably going to go right up from here and then start going down. So where did they start these trades? I want to start getting into these trades as opposed to doing the analysis. So again, I don't know what time zone this is or time frame this is, but I believe it's when it's up here. So let me just fast forward. You can see here on just the 1 hour, right? Beautifully respects that level, comes back down, mitigates this last down candle before the up move, respects it, right? So potentially this is going to be inducing the sells right here where people are saying, okay, this is an order block, right? But what we want to see is price get just above that into potentially our 4 hour level. Okay, so there you go. What time is this at now? 2 a.m. So let's go down on the 15-minute so we can see it more clearly, okay? Perfect, so right at 12, I have, this is Asian consolidation here, and then we have 12 a.m., midnight, New York time, because that's Eastern Standard Time is where I'm at right now. So again, previous day's lows, look at this. Previous day's lows is equal lows. We also have equal lows on Asian liquidity as well. So we have really a lot of factors going on right now. What else do we have? We have this uptrend. We also have an inducement right up here, and we have an imbalance just above it. Okay, so I'm just going to mark it that imbalance. That's also on our, we have an imbalance right there, right? Also at that key level. So let's see what happens. Let's go. We just made equal highs again. So I want to see it just sweep up one more time. You can see it's inducing sellers again, right? For early sellers that say, oh yeah, this is holding, let's enter here, take shorts. They're going to get stopped out. Boom, right there. So what happens now? We dabble up into this imbalance. We sweep on this liquidity. We sweep this liquidity here. Now these sellers should be taken out. These buyers here, institutional buyers, can mitigate out of their position for a break even. Okay. And again, now we can start looking for our sells. And now we have this huge trap that's going on, right? This huge trap. What ended up happening, was in London. We ended up running above Asian highs, came back down, mitigated Asian midline, came back up again to create higher highs, higher lows, higher highs, higher lows, inducing buyers into the market, right? Buyers are buying, looking for price to moon. Whereas we know that the higher time frame suggests that this daily low is going to come and get run. Additionally, we have our confluence up here. So let's go in the 5-minute. And let's just start seeing what's going on here. Again, same thing, nothing really. Let's go 1 minute. Boom. Now this is beautiful. Okay. So as a fractal, what are we looking for? We have a sweep on liquidity right here. Tags it, breaks down. Now this broke structure. Is there anything in our, here, I'll just mark this out here because this is going to be the structure, right? This is going to be a structure point here. Let's go to default and sweep. Okay. So we have a sweep on structure. It's really, this is the breaking point right here. You can see clean breakthrough, come back up. Did it mitigate? It did mitigate a little bit. But again, there was no inducement here for me to take. So I don't want to be taking that. So if anything, I want to be waiting for this to be inducing something up in here. Maybe this little candle right up here. Okay. But anyways, what I wanted to see was on the 15-minute, let's go 5-minute. Was there anything here? Look at that. See, this is a nice imbalance fill. You see that? See how there's a tiny little imbalance right here? didn't get filled, finally got filled with that. Now that's also in our higher time frame imbalance. So now we can really be looking for these shorts for sure. Now, as soon as we break up above that, let's go to right here. We have this wick. Okay, we have a nice wick here. Again, these wicks are going to be mitigated. So this just starting out from the higher time frame and going down, you can see that we did mitigate the beginning of that wick. The next possible option for wick mitigation is going to be 50%. Okay, so 50%. So right here. Personally, I wouldn't try to over refine that much and try and get in. As long as it breaks above here, I'd be fine with entering a position, just my stop above here, especially because this has all really been mitigated, but potentially it is going to mitigate 50% of the wick. And so, yeah, so this is where I would be putting my stop, because realistically, this is going to be our trading range now, right? Assuming that it doesn't break down any lower from right here. Okay, so we have our trading range right here. Why? Because we have our consolidation, we have our sweep on liquidity and mitigation, break of structure. And now this is going to be the target on the 1 minute, right? On this fractal. However, we know that our higher fractal is way, way, way down here to be targeting, okay? But that being said, let me just take all that off. So if price respects this here, right, fails to create a lower low, then what do we know? We know that this is going to be a weak high. If this fails to create a lower low, this is going to be the weak high, creating a complex pullback into our POI, boom, boom, boom. And then shorts are going to be the, that's where we want to be entering, right? We want to be entering above this weak high. Again, stops are going to be above. For me, what I like to do is I like to be a little bit more safe instead of trying to refine them down a little bit like that. What I'm just going to do is I'm going to put my stop above the strong high here, right? So it's just going to be one of those things where consolidation, sweep, okay, like it shouldn't get above this high. Maybe it'll wick above this high, or maybe it'll just slightly wick above this high, or maybe spread would take me out there. So I'm not going to try and risk that or over risk and try and be greedy. Like it doesn't matter for me personally. So what I would do is just enter right here. And again, I'd be looking at, if we go down to the 15-minute, first thing I'm looking at as a target is going to be, well, first of all, I want to see this consolidation again on a higher time frame break, right? Because then that would mean we have higher time frame order flow on our side. But ultimately, I'm looking at Asian low here. So that's a 12-hour trade. And then daily low, which is a 14-hour trade. Okay. So those are going to be the targets. And so I'm just going to take this off here. Sorry. Take this off here first, and then put at the other target here. And so, yeah, that's basically it. Let's see if it plays out as anticipated, right? So now we have multiple confluences up in this level. Okay, so it broke down. So now, no worries. This is our trading range still, right? I'm personally not entering off of something right up here because there was no inducement originally. See how this was just a clean leg, filled it, went down? This is a smart money trap right here. And this is where a lot of people get caught, is right here, where they say, oh, you know, this is where I'm going to enter, right? It's structure. The structure, right? If I look at structure, I say, here was the low, here was the high, we broke. And so now here's the lower low, lower high, lower low, lower high, right? That's what should happen. But ultimately, what I've noticed is I want to wait for an inducement first before looking at before looking at structure like that. And so the first inducement, there wasn't really anything here. So I'm assuming that it's going to come back up to there. Okay. So that's how I would be framing this trade. Complex pullback or complex pullback. There we go. Okay. So again, this is going to be the original target, right? The key target to start off at this trading range, because again, when you're looking at structure, higher high, higher low, higher high, higher low, when this comes back down into internal liquidity, i.e. back within this leg, you're looking at it to target external. And then the same thing, it comes back into internal, into this leg, and then it comes to target external. And so right now we have internal, or sorry, we have this leg right here, and then we're coming back into internal and then targeting external. So that's going to be the first part. And that's probably where this is majority of the time where I move my stops to break even and stuff, because ultimately it shouldn't get back up there, unless the only real way that it does go back up is if there's a clean POI right here that causes the move, and then it's going to come back up and mitigate that POI, which then I'll just move my stop just above that level instead and then go. Okay, so that's the main understanding to that knowledge. Okay, so this is their first trade here, right up here. Okay, that's their first trade. Okay, so let's just see how that goes. Again, almost gets you stopped out. And that's what I said before. Remember how I said that? How this was the actual level, but I said put your stop above here, and look at that. That's why you do that, because you don't have to be greedy. And again, even this is too tight for me, because this is where I would be at, or this is where I would put my stop loss, but then I would also factor in spread. So if my spread on Euro USD is 0.3, right, 0.3 pips, well, then I'll just add 0.3 to it, and it'll be 0.8. So that's where my actual stop loss would be. So without obscuring the risk to reward, so you don't think, oh man, how are these guys catching 100 to 1? Well, again, you're going to be wanting to factor in spread as well. So it's not as it seems all the time, so just keep that in mind. But yeah, this is going to be the trade, and you can see there's probably going to be a reaction right from here, or again, we have larger structure right here. So if this breaks, where's it probably going to go down to? Well, this is an inducement, right, for potentially somewhere into here. There is a little imbalance right there, but I would probably just market this whole zone, and then with this as a little level as well. Okay, so let's see if it gets back down to there. Okay, you can see making equal lows. Let me just take this off now. And I'll take all this off really, because it's not necessary. Okay, so let's go up to the 5-minute potentially. Again, what we're seeing here is now we have sweep on liquidity, break a structure, almost not confirmed yet. We do have a wick, so that essentially breaks structure, but I like to see it just go a little bit like close with bodies here. But you could see here that this is going to be an order block, so there's bound to get some sort of reaction, which is where a pullback will probably come from. Okay, so just going back to the 1 minute, let's go see. All right, so where are we? Last down candle before the up move that caused the break in structure. So right here. So this is probably going to be some sort of level of retracement. Now that we have this sweep up, break down, what are we looking at? It's the exact same thing as right here. We want to see that there's some sort of inducement, which you can see right here, inducement up here. For what level? Well, there's some clean leg right here that's probably going to get filled. It's probably going to come back up right up into this level, just like I was saying before, right? If it breaks back down here, I'll move my stop above this high, right? If I move my stop above that high, it shouldn't get back up above that. If it comes back up one more time and breaks, probably not going to go. Okay, so that's how I can manage my position. So we're going to do the same thing. Where's the inducement? Right here. The only thing is proximity. The proximity is not close. So what I would like to see is something like this. Maybe it forms again and then like this. So then this is in closer proximity to this, because people's stops or the stops aren't going to be so far away. We want it to be like really, really close to the order, right to the area of entry, because when it's in close proximity, then that's just giving us a higher degree of confluence on the sponsorship, where there's going to be clear liquidity pools right there that are going to be sponsoring that level. Okay, so let's just see here. Let's see what happens. Let's go on the 5-minute. Let's see if it holds or if it breaks. Okay, so again, respecting this uptrend, but again, we know that that's going to be the potential trap for the day. We know that we have another gap in price right here. And let's go, where is it? FEG, okay. Now, we have 1, 2, 3. So this is going to be our new trading range. This is going to be our new trading range. Okay. And even again, there's going to be a point where we have even a higher time frame one, where we have a break of this, right? Where if it breaks down, then we're probably going to get another retracement back up into there. Okay. So just keep that in mind. Yeah, keep that in mind. Let's go on the 5 minute. Let's see what happens. Okay. So it's respecting. Did it break here? Yes, it did. So just swept it a little bit. I'm just going to take off this uptrend now. It's not useful anymore. Okay. And so this, wherever this ends is going to be our structural low. Okay. So this broke right here. So now we have a sweep on this. And now we even have a 15-minute, right? We have a 15-minute level up here. What else do we have up here on the 15-minute? We have a rejection block right here. See this wick, right? So that's going to give us confluence that's where we want to be entering up at around 12,745. That's going to be the most extreme entry, with obviously 50% of that wick as well is going to be the other area of confluence. So you can see on the 5 minute, beautiful up candle before the down move that closes in that gap there. And so, yeah, let's just see. And then this is going to be right here is going to be the order block that you can use. Okay, so right at this point, you can just set your position right here. And again, factor in spread, right? So if it's 2 pips, right, that's your stop, and then your spread is 3 or 0.3. Add that in, right? Don't be greedy. Don't be greedy. But what do we have here, right? We sweep this low, we break that structure. We also take out these equal lows. So now this should hold and it should continue up. Okay, so let's just see. So it does. Look how inefficient this leg is coming up. Okay, this is beautiful. This is exactly what I want to be seeing. Ideally, now we have an inefficient leg, and now we start. Oh, that's not what I meant to do. We start consolidating and we start kind of squeezing up into it like that. Okay, that would be ideal, and then we can start coming down. Okay, so let's just fast forward that a little bit. Again, hits that fair value gap, inducing sellers, right? Inducing sellers into the market right here. Even though this was our inducement, that's why I want to see it form a little bit higher than this, because this is a little bit far in proximity. Whereas if we start getting highs here that are forming, it's going to be closer in proximity, really giving us confidence. But you can see there, okay, so we have a sweep right here, this high, a little bit closer in proximity, right? Only about a pip or 2 pips. So that's perfect. So we can enter off that. You can see another clean leg here. So again, just beautiful. That's what we want to be seeing. And now it breaks structure, right? This is really the structure break right here. But if you can't see that, then this is the real higher time frame structure break. So again, same thing, right? Beautiful entry. And again, that's this one right here, I believe, right? Is that the one? Oh no, they actually didn't take this one. I don't know why, because this one was a beautiful one. Maybe they just missed it. And the thing that I really like about this one that has really good confluence is that Asian lows haven't been taken out yet, and they're equal lows, right? So because that hasn't been taken out yet, I think that this is a beautiful setup. And again, this is where I'd be taking out majority of my trade here. Again, right here is going to be what? Right here is going to be our trading range, right? Right here is going to be our trading range where we have a high, we have a sweep on structure right here, sweep, break back down, inducement into this order block, boom, take it and go down. Now we have extreme confirmation on any pullback back up. But first, I want to see this trading range get taken out, right? This one probably going to get some a little bit of a bounce here. Why? Because we have a little inducement here as well after we had a sweep, right? We had consolidation, sweep, break above. So just in case you want to be taking partials right at around that sweep, or at least I would. It's obviously not financial advice, but you can see, okay, so we break that trading range. There we go. Let me just clear some things up off the charts here. So I think the reason why they didn't take that was because this one was already there, right? Like it already hit essentially break even. I think they entered actually at the 50%, if I'm not mistaken. Yeah, they entered at 50% of the wick right here, which is why it didn't tag it. So they got the pretty extreme entry on that right there. And then they didn't take this one. So if you missed that one, you definitely could have taken this one. Anyways, let's see how it reacts at Asian, if it gets down to Asian lows, sorry. Yeah, you can see, right, structure holding here now because we broke structure and we have to hit our target, right? We have to hit our objective. It's not going to break structure until it hits our objective. Boom. Objective hit, Asian lows. And now this is a beautiful, beautiful, beautiful potential trade here. And this is the one that they got on this one right here, right at that wick. What happened? We have imbalance right here, and we have equal highs. Oh, sorry. We have equal highs inducing that imbalance. Now, this is beautiful. This is exactly what you want to see. So first of all, let's see the confluences here. We have consolidation, sweep, break a structure, right? So we have, this is going to be our new trading range right here. We have equal high inducing imbalance into this order block right here. So again, if you didn't take that one, no worries, because there's potential if price gets back up to here, then this is going to be the one, the really good one that you want to be taking. This is the reason why this is a little bit lower, and they say it actually in their stories. They say, oh, it wasn't, yeah, right here, not as strong as the initial entry, but still had its confluences. Why it's not as strong is because Asian lows have already been taken out, right? Realistically, from here, that could have been the liquidity move of the day, right? That could have been the move of the day. And now potentially this is all one swing, and we're going to come back up here, and then potentially maybe the next day take out these equal lows here and daily lows, right? The fact that Asian low equal lows were taken out here is the reason that these ones were great and were good entries in my opinion, and great entries. And this one is a little bit more risky. However, based on the higher time frame analysis and knowing that the daily structure, that this is very, very likely to get taken out, this daily low, this previous day low, I would still be about taking this. And especially with how beautiful this is set up, where we have a beautiful order block right there. Let me just turn that into a refinement. Okay, because it's a small time frame zone. We have a gap right there. We have equal highs. And so now this is it. This is beautiful. What I would do is I would just set my entry right there, right at that imbalance fill, and your stop can go above here. So if you're in these trades, right, if you add it into these trades, all your stops can go just above here. Obviously, if it's 1.7, again, just to keep consistent with the 0.3, we'll do a 2-pip stop. Again, this is going to be your new trading range low here, and let's go. So beautiful. Now even setting up even more equal highs here right before our POI. And this is something that I'm pretty sure that they use. They use like a divergence. I don't know. I think they have their own indicator, to be honest. But I think you can just use like an RSI to confirm your POIs, really. Like, so say this is our POI right here. I can pull up the RSI here and I can say, hey, this is high, high, and then boom, a higher high. Whereas here, what do we have? We have a high, we have a lower high, and then we have a lower high. So now we're getting divergence on the RSI, confirming this POI, confirming the structure. So because of that, this is a valid setup to take, and it just gives that extra confluence. If you're not sure which POI to take, having something like this can help you out a little bit. So that's what I've just kind of learned, I guess, from what they're doing, and just seeing like, okay, I think that they do use divergence, because a lot of their POIs will have some divergence, especially the ones where they add in randomly, like this one. Well, for my eyes, randomly. For them, obviously, it's not. But see how they added in an entry right there? I believe that's why, because as soon as you get some sort of bearishness like that, they just entered in right off the as it's going down. That's at least what I believe. So I think the next one that they entered was when this candle was going down, and then they just set their stop again, just somewhere like around here. I'm not too sure, honestly, how they do it, so I'm not going to try and explain that one, but that's just my idea. of what they do. But again, this is beautiful. What happens, we have these 3 runs up into that POI. We have a huge imbalance right here. So again, if we're anticipating that, okay, maybe this is going to go up for the rest of the day after we hit Asia lows, well, then all we have to know is that we have a consolidation here, a sweep, break a structure, and then up. So where are we going to be targeting? Where are we going to be taking out profits? Ideally, we take it out right here, right? Anywhere below these lows, because anywhere below these lows, if I was looking at a buy setup, it would be like this, right? This is going to be inducing this point of interest, and then it goes up like that. So that's where you want to be taking out any partials in and around this zone here. That's where at least I would, if I were trading this live. But again, the main target of the day is going to be that daily low. Okay. So again, break back up. We have a sweep on liquidity here. We have a break in structure right here. Also a breaker block. Okay. Let's see if it uses it. We just front run it there. Nope. So again, what happens? We mitigate out of this now. That's swept. We have another breaker block right here. We have an order block within it. Let's see if that gets taken out or gets used before. Yeah, so there you go. Boom. Target the daily lows. Okay, so those were really all of them. They had this one, like I said, I don't know what the hell they were doing there. To be honest, they must have their own little system for entering on an extra one on that too. So again, that's how I would have done it, and that was kind of the explanation as to why they were taking those trades there. And again, as you can see, what ended up happening is that if you were holding this position, if you wanted to target the most extreme level here, so we targeted the daily level, which is respectable, right? 10R, 7R, and 10R again. If you really wanted to take it down to at least this low here, well, then you'd be looking at a 23R. And if you wanted to target that 50% of the daily order block, then you'd be targeting these levels here. Okay. So that would be it right there. But I would honestly be just targeting this low because that 50% might not hit. And especially because there's the big figure right here, 2250 or 2250s. So I would be, if anything, looking at 2250s to get hit. But let's just see if that does get hit. Boom. So look at that. Look at the precision on that, right? Right at the 50%. It hits it. I would be out of my position much earlier than that, to be honest. I'd be out of it right at the top here because again, I don't want to be greedy with my take profits because look what happens. Immediately it hits, especially a daily zone. Immediately it hits, comes back up. All that trade that you would have been in, that 25R, if you were, maybe it was a little bit further beyond, would have just got absolutely swiped, right? You would have got absolutely swiped and you would have lost all that profit. So yeah, anyways, so that's just the breaking down of the WWA liquidity inducement theorem on December 15th. If you guys want more of these, more in depth, like I wanted to bring it to the point where it's super, super in depth. So if this helped and you guys like it, then let me know. I'll keep making them. Just let me know in the comments, and yeah, just make sure to like and subscribe, and hopefully I can, help you guys out. All right, guys, have a great day, and catch you guys later. All right. Cheers.